Greetings, everyone. Greetings, greetings, greetings. Good afternoon. Good morning, wherever you are hailing from. We're going to get started here in just a minute. Just so you know, you're here for quote, close, collect, our B2B's e-commerce cure for cash flows. This is our monthly installment of our growth discourse series that we've been having some great conversations over the course of the last couple of months. Last one specifically around service-based pricing, which has really been a good segue into this current session, which is quote, close, collect. We're going to get started here in just 1 second. Really appreciate everybody being on time. I'm going to give it about another minute or so. We got a lot to go through, so I don't want to belabor the point. I know you all are really eager to get back to your businesses, so we'll get started here in just 1 second. We will have the Q&A open. You can drop any questions that you may have in the Q&A as we go along. I'll try and address them as we go along. If not, I'll make sure that we get to them at the end. Again, the Q&A tab is at the bottom of the screen. If you're on mobile, look for a tab that should have essentially like a Q&A or some little call outs buttons. It should be located there. Everyone's screen is different, so I apologize if I'm not able to troubleshoot that for you, but we welcome your questions either way. And we're going to get started here right now. So this discourse, right, in this series, as we call it, is the sales growth discourse. This discourse is directed at B2B businesses. So if you're a B2B business, you're in the right place. I thought it would be really excellent follow-up and a logistical follow-up to our previous discussion on pricing for service-based businesses. Now, I do recognize that not all B2B businesses are service-based and not all service-based businesses are B2B, but the intersection of those two areas is largely underserved by knowledge base in the industry. So really excited about this sales growth discourse here for March. For those that don't know, we do this on a monthly basis. So we talk about topics, everything ranging from sales to the technology or sales enablement, so that we can grow bigger and better business. And this month, we thought we would stand in the gap for B2B businesses that are sort of having trouble or challenges as it relates to what we would call the quote to cash part of the sale. All right, so we'll jump right into it. First and foremost, this is me, Juan Perez. I'm the Chief Executive Officer of Hybrid Media. As the slide says, I don't have to read it, but we have been around here for now. In November will be 20 years and have encompassed a lot of knowledge through hard knocks, to be honest with you, about sales, and not just sales, because a lot of the discussions that we have aren't specifically around sales, but around growth in sales, how to build the sales team, how to build the right technology and processes around your sales team so that we can build them up for success. And that's really what the sales growth discourse is. You're not going to hear a whole lot of tactical discussions here about sales. It's going to be more about strategic from the perspective of leadership, whether you're a sales leader or a business leader, an entrepreneur, a CEO, a founder. These series are really built for you. So really excited about this particular discussion around specifically around how we can build our sales growth around this topic. And this is actually came out of our last discussion around pricing. We got so many questions. Thank you for everybody who sent in questions around pricing. Had a couple follow-up discussions. If you still are looking to follow up with me, by all means, after this call, happy to, in our follow-up, we'll send you a link so that you can schedule a one-on-one with me to talk about either pricing or this topic here, which is our quote to cash process. All right, so let's get started. Let's jump into it, right? How many of you have actually raised your hand in your office, in your car, wherever you are, have used this term at any given point? So I don't have to pay the fees. It is something that I've probably said, I'm cheap. I ain't gonna lie to you, I am cheap. And it's not something I'm proud of, right? But one of the things that I've said over and over again is analyzing what the fees are. And we have to keep in mind what a fee is, right? Fees are essentially our gateway or entrance to access, right? Giving us access to something. There's always a fee associated with something. We complain about fees, right? We complain about taxes. We complain about add-ons. These are all different forms of fees, but we're going to spend some time today talking about why I believe that the fees associated with e-commerce for B2B businesses might be something that we want to reconsider. So I'll give you an example here, right? Have you ever walked a few extra blocks, if you live in a city, to the ATM to avoid paying a fee? I know I've done it, right? And conversely, how many times have you decided not to? Right? We focus so much on how many times we've avoided a fee, but there's been times that we actually have decided not to. I want you to think about why you did not take the time to actually walk those a couple extra blocks to go to the ATM to avoid paying a fee. And the reason why is probably out of convenience. Maybe you were running late, right? And you said, you know what, screw it. I'm going to go ahead and pay this ATM fee. I'm going to go ahead and pay the fee associated with this cup of coffee if I pay for it in cash, right? So I'm going to take this money out of the ATM. The point of the matter is a fee is always charged or assessed as a transaction for convenience, right? And we're moving into an age where convenience has a lot more value than it used to, especially post-pandemic. And think about this, right? How many times have you now looked at convenience quite differently? And I think, especially as it relates to our employees, they value convenience a lot more. And I've learned from my team, of which is younger than me. And I know you guys are smiling on the call, that convenience does have value, and with value comes a price. So we'll talk a little bit about that. But first, I want to just jump into a couple of stats. First one is 77% of B2B buyers said that their last purchase was difficult. And this is a Gartner stat here. While difficult, right? Difficult is subjective. It isn't a word that we want our clients to associate with us and our businesses, whether it's clients, customers, buyers, all different words for the same term, especially after they've already made the decision to buy from us. Think about that, right? So they've gone through the whole marketing process, they've gone through the whole sales funnel, and now they've agreed to buy from us. And now is going to be the time that we're going to make that process what we would call add friction or make that process, in this estimation, difficult. Something to keep in mind, 77%. That's really high. Another stat. 60% by 2021, a majority of B2B buyers were millennials who want touchless experiences and self-service options. And this is Trust Radius statistic, right? And this is talking about by 2021, this data was trending in this direction, probably even more now in 2024. We have a new generation of working professionals, and they have different expectations about the B2B buying process. And this is evidence of that, right? We have to consider our buyers. And, 5, 10 years ago, even 15 years ago, 20 years ago, when we started our business, the millennial, specifically the millennial buyer, wasn't a factor, right? The internet at that time was still, developing. And I think that the concept of being able to purchase goods and services online wasn't where it is today. And yes, we could, and we still have the option to purchase retail online, but why don't we do it as it relates to our B2B processes? And even this term of touchless, it's something that was a buzzword during the pandemic. But what does that mean? What is the difference between, or how does touchless or self-service, and how can we make our B2B and service-based, right, businesses more touchless and self-service? I think we would actually be able to save a lot of resources internally, right, within our team and financially, if we were able to execute a buying process where our buyers essentially sold themselves. Something to keep in mind. So we'll talk a little bit about that as well. And then another one here is 32% of customers will stop doing business with a company that they loved after a bad experience. This was actually a shocking stat, but I'm not surprised. 32% would actually stop doing business with you, even though they loved you, after a bad experience. And actually, I have had and this brought me back because I won't name names, but there's a client out there that I had an absolutely amazing relationship with. And, we've all done it, right? We've had a bad experience and we've learned from them. But as a result, we don't do business with them. And I still see him today, the client still to this day, and we talk and we have, ask about the kids and the family, but that business is no longer. So keep that in mind. 32% of customers will stop doing business with a company that they loved after a bad experience. Now, we may not run to Google to write a bad review, but when considering your options in the future, we may knock those businesses that we love down a peg and go for ones that have essentially stood up in absence of our own business that they love. For B2C, it's way easier for them to win trust back. I mean, let's be honest, right? But if your buying opportunities are not as frequent, B2B is a lot harder to build relationships and are easier for our competitors to step in on our behalf when we screw up. So keep that in mind. All right. Let's talk a little bit from a definition standpoint, because a lot of businesses I found, even in planning for this, and I've spoken to some of my colleagues in the industry about what exactly we mean when we're talking about quote to cash, right? Quote to cash essentially is that, and I'll read it, is the end-to-end business process related to the life cycle, sales life cycle. The process spans from the moment an offer is made or presented and to the prospect, to the time the revenue is collected, allocated, and recorded. So what does that look like? This could be in the point in which the beginning point of your quote to cash could be when a proposal goes out to a prospective buyer, right? Or a client, to the point in which they've actually paid their bill. And when I say paid their bill, if, for instance, you have a contract with a 12-month contract with them, that quote to cash process extends through all 12 payments, monthly payments, right? So this is probably one of those areas that we talk a lot about sales. We talk a lot about marketing. We talk a lot about customer service. Even HubSpot, which I love, obviously as a HubSpot agency partner, talks about that flywheel. But where does this quote the cash element of it really fit in? And to be honest with you, I think this is one of those redheaded stepchilds as it relates to the revenue operations of a business. Quote to cash is essential because it's essential to your cash flow. And this is oftentimes where you gain so much of the data to improve your subsequent sales iteration. So something to keep in mind. All right. Okay. So we're going to spend a little bit of time here going through this, what I would refer to as a traditional B2B cash to quote operation, right? And we've all seen this, at least portions of this, where essentially we draft a quote. And when I say quote, you may use proposal, you may use a number of different terms, right? You draft that and you send that off to your prospective buyer or client, right? And then eventually you may negotiate and convert that quote to a contract. And then that contract gets sent out, and then we wait for a signature, right, on that contract. Now, that oftentimes can be friction in this cash to quote process. Why? Because we go back and forth, maybe negotiating, which is fine, right? We have the discussions, we refine essentially the contract, but what winds up happening, and I have one in the pipeline now, is we're waiting for signature. And what do we do? Just like when we're doing collections, we're waiting for signature. Now, back in the day, we would actually have to mail out a signature. We have the benefit with email now, and electronic means, but even with that, we are required to do follow-up to make sure that we get signature. Then we store the contract details, probably in like a Google Drive, perhaps, or locally on a computer. We then draft an invoice, maybe several invoices that go off to a client. We send that invoice, then we wait for payment. And these next three stages are killers for not only from a profit margin perspective, but oftentimes if we do not get these right, we wind up actually working not only for free, but paying our employees to actually execute a contract that we will not even be able to recoup the revenue to support their salary. And I've done it. I've seen other businesses do it where we're waiting for payment. We're sending out email reminders. Who's doing that? Either you as the executive or maybe your team members going back and forth, back and forth. And then chasing, calling them, collect. All of that is resources, human resources, time resources, financial resources. It is a huge time suck. And we'll talk a little bit about that. Then eventually we'll receive a paper check that just pops up in the mail. One area I didn't include here is we got to then go to the bank, right? Now it makes it a little bit easier. You can scan a check using maybe an app on your phone and deposit, but then you have to go into your financial software, whether you're using QuickBooks or maybe FreshBooks, and reconcile that invoice and then send the receipt to the client. Or if you don't send a receipt to the client, you just acknowledge them by saying, thank you for your business. We received your check. All of this process is things that we don't consider. From the time that we drafted that quote or that proposal to the time that we actually sent out a receipt. Now, imagine if this happens on a continual basis, where you have a 12-month contract with monthly payments. Each time you have to wait for payment, send the email reminders, call the Chase collection. And we've all done it. We may be in that cycle right now. But think about how much time gets wasted that we could be executing on behalf of this client or other clients if this was all automated. All right. So let's talk a little bit about our 3 stages of what I would call the 3 stages of quote to cash. Nearly every company has a defined quote to cash process, right? But we may not have it documented. And I highly recommend that we document processes, all processes, but specifically as it relates to quote to cash, because this is the type of thing that even in a small business can be outsourced if it's actually documented and executed properly. Oftentimes, why we as executives do this in-house is because we don't trust people to do it. And I understand that. If we're receiving paper checks, it makes sense. We don't know where our money's going. And as small businesses, that may be something that we have to handle ourselves. And me as an executive, I track my time and I know what my salary should be as the executive. I'm not the person that should be going to the bank, depositing checks, or even scanning checks with the phone. That's something that I want my team to do, or better yet, have a virtual assistant or operations assistant that's actually doing this. So here are the 3 stages of quote to cash. Number 1, if my button can, there we go. Quoting and contracting. So this is the first, I would say, third of that quote to cash process. This is where your sellers, us, we, come to an agreement in the form of a contract, usually maybe an insertion order, with the buyer about exactly what they're buying, how they're buying it, when they're buying it, how frequently they're buying it. This is, essentially they've agreed to purchase, but these are the particulars. Maybe you float the invoice for 30 days, the initial invoice for 30 days, or maybe you request, 60% upfront. This is all what happens in that quoting and contracting phase, right? Next, billing and payment. Now, billing and payment oftentimes comes from a whole different department, right? And I think you're seeing where I'm going with this. This is where the seller charges us, right? We charge for the product or service that the buyer agreed to purchase in step 1, and the buyer pays the merchant within a specific payment period. Now, we may have payment terms net 30, net 60. How many times does a client ever hit the post? And when I say I'm an old radio guy, when I say hit the post, what I mean by that is if I said that if I am the seller and the buyers agreed to pay their bill within 30 days, how many times does that check come on the 30th day? It never does. However, if the payment is electronic, not only will it come when you expect it to come, but it comes automatically, and you can now project how much money and when it's going to come from a cash flow perspective. That is huge, because you'll know exactly day to day, not just month over month, but day to day, how much cash you will have on hand if you're using an e-commerce method to collect payments, right? And lastly is accounting. So this is where the end part of that stage, you've received your payment. Now what happens? How are you recording this payment? All 3 of these stages, and many of even our small business operations, are done by 3 different departments. And we may only have 3 individuals working at our organization. We have one person, maybe the CEO and or salesperson, that's doing the quoting and contracting. We have someone else doing the billing and payment, and the third person, maybe a bookkeeper, who's doing the accounting. That's ridiculous. And it's inefficient, especially for small businesses. So and just to get into detail about what we mean as far as accounting, essentially, this is where we store the copy of the receipt. Maybe we use QuickBooks and we reconcile the books so that we know what our income is versus our expenses on our income statement. So again, these three areas are super, super critical for our business. We spend so much time doing our marketing and sales, and then we fumble the bag at the goal line. It's crazy. So we got a question. Oh, from my girl Desiree, asking, so I don't forget, how does the enhanced Q to C process benefit us from a tax perspective? I.e., does it output any tax documentation, et cetera? That's an excellent question. See, one of the things that happens is, while we think that checks are, we've been conditioned. I'm of a certain age that we've been conditioned to believe that checks are better than cash, right? But in what way? Cash is a note, same as a check. And ultimately, as we see, is to answer your question, Desiree, is the accounting element of this, right, is where we reconcile. There's no electronic reconciliation. There's someone who has to acknowledge that this check was actually deposited to the bank. And the bank has acknowledged, because the bank is essentially the third party, has acknowledged that that actual check has been received and deposited. And then we record that in the accounting software. It's a checks and balance system that is inefficient. And from a tax standpoint, um, that is an important element, because if we're not doing that accounting properly, it could lead to us getting audited, um, especially as it relates to, for many small businesses, they file their quarterly tax returns, um, and making sure that your bookkeeping is on point is crucial. Um, and at the end of the day, we may wind up paying huge penalties and then interest to not only the IRS, but our state and local governments, because we're not keeping track of our books. We should be able to have at any given period of time, the three documentation that we should have, not only from a business standpoint, but also from an operational and tax standpoint, is our statement of cash flows, which is what we're talking about today. Our balance sheet, which just kind of talks about the overall health of the organization year to year, and then our income statement, right? Or depending on where you are in the world, you may call it profit and loss statement. These are the three financial documents that we really should be keeping track of, and in some way, shape, or form should be translating them into reporting that we keep on a dashboard somewhere. And again, this is where quote to cash software can be very, very influential in making sure that we're staying on point. So I hope I answered your question there, but excellent question there. Okay. So let's just talk about some of the challenges revolving around this quote to cash management. The truth of the matter is, and I'm here discussing this in this discourse, and there are very few of us who have actually managed or mastered the art of efficient, customer-centric Q2C management. It's just, and I'm one of them, right? I'm constantly tweaking our tools, trying to get us paid quicker, making sure that we're accepting or creating what we would call a frictionless buying process. I'm a big fan of, and I haven't seen him on TV much recently, but Marcus Lemonis, the Prophet, right? And he always talks about people, product, and process, the three Ps. And almost invariably, every business that he goes into, and all of these businesses on the show, for those who haven't watched it, are broken, right? And yes, I'm going to get to that question. Somebody asked about if I could break down what the three Ps are. Yeah. So people, product, and process, right? Again, and those are the three Ps that essentially are crucial for any business. Most businesses that we approach have great people. The product is why we get in the business. And honestly, if you don't have great product, the industry is going to weed you out anyway, right? But what is invariably broken in most businesses is process, 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 process. It is the backbone and heart of our agency. And yes, while um, we execute on behalf of our clients in revenue operations, without great process and without refining that process over time, we're destined to fail. So most organizations have, like, for our Q2C management, have anywhere between 3 to 5 tools that they manage, right? And I'll give you some of the most popular. They may have a banking app, right? So whether that's I know Cash App is pretty popular. You shouldn't be doing business on Cash App. I'll just put that out there, right? I know many of you are laughing, but there are some businesses out there that are doing business on Cash App. Another one is Zelle. You may be using your native application as it relates to your banking, to your bank. In addition to that, you may have, from a financial standpoint, you may be managing, and I'm one of them. Matter of fact, I'm a QuickBooks partner. So you may be using Intuit QuickBooks, whether it's desktop or QBO, to manage your finances. And in addition to that, you may be using, let's use Square or some other payment processing software. And these are all what we would refer to as disparate tools, right? These are tools that are, yes, individually are very, very useful, but they don't speak to each other. We want our tools to play together in the sandbox really, really well, right? And it's important. Remember what I said, if I could go back, QDC is an end-to-end process. So we should be managing that process from the same set of information, right? And I think you all know where I'm going at with this. CRM, right? Customer relationship management. We are managing the relationship from end to end. If you are a business, you are serious about growing your business, if you have not invested in CRM, you're doing yourself a disservice. There's no reason why you should have employees before you have CRM. So if you have a team and you do not have CRM, the first thing that I would say, the first piece of advice I would give you is to do some research and invest in CRM. Obviously, we are HubSpot agency partners here, and we believe, flag waving, huge HubSpot supporters here, but there are other software platforms or CRM on the market. Maybe you're in a specific industry-specific software sometimes is a better fit for folks. The reason why we love HubSpot is because we believe that it is a seamless onboarding process. And especially for small businesses that are in growth mindset, you don't want to spend a ton of time sort of implementing your software. You want it to get up and running really, really quickly. And we help you to do that. So our onboarding process is 90 days from start to finish. And you and your team will be able to recognize 3 specific goals that you set out to make sure that at the end of that 90 days, you're fully onboarded and implemented, not just onboarded, but implemented within the HubSpot software. But again, this is not a HubSpot conversation. It's more so about making sure that your end-to-end solution, not just for Q2C, but your end-to-end solution integrates with not only your marketing, but also your sales and customer service software. And specifically, what I'm trying to say is super important right now, your quote to cash process here. All right. So, let's see. So Croker Duraney asked a great question. Which is the best CRM? Like, I can't answer that for you. I know my opinion, and HubSpot is in our opinion the best CRM, right? But it works for our organization. It won't work for every organization. I encourage you to do some research. One thing I'll do in our follow-up email that we've sent out, we did it was either a blog post or a white paper some time ago on sort of going down the list of the top CRMs and what you should be looking for as it relates to investing in a CRM or adopting a CRM. I'll tell you the number one thing for us is adoption, right? You want to make sure that your team or you as the individual, obviously you as the leader, is going to be able to adopt that CRM as easy as possible. You want to get up and running as quickly as possible. There's Salesforce out there. I will tell you right now, I'm not a huge fan for implementing Salesforce for small business. Why? Salesforce and HubSpot, right, are like the Apple and Android of CRM systems. And I know I've gotten off the path here. I'll get back to it, but I think there's a good point. Whereas Salesforce is a great platform, right? It was the first one to break away from these enterprise level and offering CRM at all different levels of a business's growth. However, because it's the ability for you to customize almost every aspect of Salesforce, the challenge is that you're actually going to need resources, not just financial resources, but you're going to need a team to be able to manage that software platform, not just today, but ongoing. So for those that are looking into Salesforce, I know a lot of nonprofits use the nonprofit discount that Salesforce has. In actuality, HubSpot has mirrored that process as well. So they offer a 40% discount to all nonprofits. But I would say those are the two industry standards. There are some others out there. Again, I'll follow in our follow-up notes. I'll make sure that we get out our best, not only best practices, but some thoughts about what to consider when investing in CRM. So Croker, thank you for that. Appreciate that. All right. So we talked about most organizations using at least 5 different tools. What does that mean, right? It means that one tool gets used for a quote. Another tool, let's say, gets used to convert that quote into the contract. Then we have another tool that may be used for signature, like eSign. And other ones that there are all kinds of eSign softwares out there on the marketplace. Then we have another tool that may be used to prepare an invoice and so on and so forth, right? What's the problem with this? It's very clunky and it's slow. And what we do not want to do when we've already closed the deal is we don't want to slow down the process. There's no reason for us to delay us getting paid. Delaying payment is what will kill business, right? It's the reason why you go in a coffee shop nowadays, there's no more cash registers. There's a tablet there because you can tap and then move on. Matter of fact, you're able to pay while they're preparing your latte. It's self-service. It's touchless. You can use your mobile device to tap and actually check out. Now they even offer the ability to give them a tip on top of your latte. So now your $6.50 latte is now $8 because you had to tip them. But that's a whole nother discourse. We'll talk about that another time. But one of the other pieces of this that I think also gets missed in a cash to quote mismanaged system is you miss opportunities to capture and retain data. Right. And what I mean by that is in each one of these stages, you're capturing data. You're capturing the customer's EIN number, perhaps their physical address where you can send them, holiday gifts at a certain kind of, with each one of those iterations is actually a conversion. And we should be capturing data. That is the true currency in 2024 is data. So just as important as getting paid is also capturing more and more data, learning the systems and the interworkings of your clients with each iteration, with each invoice that gets paid is hugely valuable. And with a bad mismanaged cash to quote to cash system, you're not gaining that intel. And then let's talk about the second piece here, which is collections. Oh boy. I can tell you some stories about collections, especially in the early days of hybrid, our agency, collections was a huge problem. We had some international clients. We were doing work in the Caribbean diaspora, and not for lack of trying. Conversion rates, things, getting a check from, in that time was a Jamaican-based company, up here to the United States, just from a snail mail's perspective, could take 2 weeks. And that's from the time that they actually put it in the mail. But because of that float, gave them the excuse to not pay you on time. And it also introduces variables outside of your control. Whenever possible, avoid collections. Why? Because it, and it goes into point 3, it expends resources that you do not have. So now you have to expend a resource, maybe a human resource, to make phone calls, to call client X, an Acme company, to say, hey, we did not receive your invoice for March. Can you give us an update on when we can receive that? Or perhaps you send them an email, right? Now, remember we were talking about fees? I think for many businesses, I would sacrifice, and no shade to some of our team members, but I don't need to pay someone to sit there and make phone calls and send emails to a Acme company or client X to get money that they've already agreed via contract to pay me. That makes no sense. And in the age of 2024, and in this day and age, there's no reason why we need to do that. It's inefficient and it's expensive. And then we'll complain about 2% that we may lose or sacrifice, whatever words we want to say, on electronic or e-payment. E-commerce is the way of the future, whether it's B2C, B2B. We need to get on board, because not only is it efficient for our businesses, but it's also efficient for our buyers. It makes it so much easier for them. If they don't have the cash on hand, guess what they're doing? They're doing the same thing we're doing, which is floating 30 days. So you're waiting 30 days to get paid from them. They're waiting 30 days to get paid from their clients. Right? So why not give them the option to pay via credit card? I'm willing to sacrifice 2% there. 1.5%, 2.5%, it's worth it. Think about that in the grand scheme of things as it relates to human resources and money loss. Those checks that never come, the check got lost in the mail, money that comes in 6 months later, 180 days past due, 270 days past due. It's ridiculous. At that point, that cash has lost a tremendous amount of value, because you could have used that money to invest in your business and invest in business development and bringing in new customers. Instead, you're investing it in collections of customers that you already have. Having cash on hand, we say it, cash is king. So resources can be very labor intensive and very, very expensive. So let's take a look at this typical B2B cash to quote process, right? Again, this is the same thing we were looking at. And what I'm just highlighting here is these 3 stages that I talked about. If you've been in B2B for a while, you know that this is the bottleneck: waiting for payment, emailing, sending email reminders, maybe making phone calls, text messages, maybe WhatsApp, messages to a customer. This is where it all gets bogged down. And remember, this is post-sale. You've already got a contract. So like I said, if you've been in business for a while, you already know. So to solve it, what do? We wind up throwing more resources at the problem, more human capital, more financial resources, and that is not efficient. And ultimately, had we just gone ahead and invested in a more automated system, might make sense. So let's talk about what that cure looks like as we get away from the problem and more towards solutions, right? So our e-commerce quote to cash cure is 3 steps. First, conquer the data silos, right? We want to share information across the organization, automate the mundane, measure success, and fuel growth. So this is our 3-step process. The first step is to integrate the right technology. We already had this discussion. That's CRM, right? And CRM systems that can not only just do marketing or one area of your revenue operations, but also can integrate with your quote to cash software, right? So they can do not only your marketing, your sales, and your customer service, but also your quoting and invoicing tools. It also eliminates the need for multiple systems that don't speak to each other, don't play well in the sandbox together, and saving you time and effort. It's super, super important. In addition, again, with the data silos, eliminating data silos ensures that there's consistent data flow that goes from your sales cycle, right, which hands off into your quote to cash cycle, essentially, leading to what ultimately is what we're looking for. The holy grail, if you will, is a much smoother or frictionless buying process. All right. Number 2 is automating the mundane. I am a big, big fan of automation. There was a presidential candidate that I won't mention in the last election cycle that talked a lot about automation. Didn't get a whole lot of look, but one of the things that they discussed specifically was around the concept of the fact that a 40-hour, 5-day a work week is probably in the future not feasible. And the reason why is because of automation. And I've spent a lot of time thinking about that. We spend a lot of time resources doing tasks that can be automated. And the reason why we do that is we have to, and maybe not us as leadership, right? But especially the rank and file do that because we have to justify our salary and our position. But that's not efficient business. And if we actually watch and take care of our teams, automate the mundane so that they can focus. Not that we're taking their jobs away from them, but we can focus on the growth of the organization, which I talk about in bullet point 3, right? We can leverage automation to free our team up to focus on relationship building and closing deals. That can't be automated. In addition, the automation tools essentially grease the skis, provide a smooth workflow for us to customize the experience between our organization and fusing the relationships between the customer and buyer, or buyer and seller, buyer and seller. And ultimately your team, my team, our teams are going to thrive. There's no question about that with the newfound time. One of the things that I talk about as an agency is our unique selling proposition is not about creating some or implementing some really amazing software, or perhaps, creating a marketing or sales process that you're just going to love. It's about saving time. We are not creating any more time. It is the one resource that we will never have more of. I don't care if we go to Mars, land on the moon. We are not creating any more time. It is the most valuable asset above and beyond money. So I always say to my new customers or prospective customers, what will you do with the newfound time that we create from you? And our goal is to give each and every employee at the organizations that we work with 30 minutes of their time back every week. It is our unique selling proposition. If you haven't heard that from me, let's talk. All right. And then finally, measure success and fuel growth, right? So what do we mean by that? It's not just good enough to execute. We need to also have the reporting tools that validate what we're doing, right? We need to have an understanding of what these metrics talk about. I've never been a math guy. However, I think it's super, super important for us to understand what our metrics are, and they can be very simple. You know, for a good friend of mine, his metrics are: did I make more money than I actually spent this month? Right, and he uses that as a barometer for his success. Now, I tell him he needs to be a little bit more sophisticated than that, but that's a good place to start, right? What are our KPIs? Why do we call them key performance indicators? Because there's a ton of performance indicators out there, right? But which ones are key? And how do we track them, right? We need to establish key performance indicators for our quote to cash process as well. And then by analyzing that data and making essentially data-driven decision making based on that data, we become not only a lot more effective, but a lot more efficient, which helps us to save time for our organization and our customers at the same time. And we turn our organizations into a well-oiled machine, driving bigger and better business and better results, happier customers, which is ultimately, again, what we're looking to do. All right. So what does all of that look like ultimately? Well, remember our graph, we've basically streamlined it into this process. We create a quote, we capture a signature and payment details all in one step. We auto create the invoice, and all of this is automated, right? And then unlike before, where we essentially had 4 and 5 disparate systems that were operating in our cash to quote process, we're actually creating one system. We're using one system to create one unified process that actually can allow our flywheel to spin faster. So if you see there on the right-hand side, we have our auto create invoice. Essentially go to auto collect the payment, auto send the receipt, and auto reconcile the invoice, then do it all over again. Why is that super important? Especially, again, using the example that we discussed before about, for many of our B2B businesses, we have 12, 18-month, 3-year contracts, right? Imagine how many times you got to do collections on that. If we had an e-commerce system that was set up to automate all of that, think about how many hours of time over a period, and I will show you that in our next slide, how many hours and how much efficiency is gained by automating our cash to quote process through e-commerce for our B2B businesses. Remember, these are the final steps of your sales process. This is a handoff to your customer service or your customer success or onboarding happens at the point in which that capturing the signature and payment details, essentially that's probably the end of your sales process. You've gotten the agreement. What oftentimes happens in organizations is the salesperson has got to make sure, keep an eye on the invoice. Why? Because they get paid commission only when the check actually arrives. So they have their eye in the cash to quote process when they should have their eye on closing that next deal. It also helps you just from so many different angles. So let's talk about what this looks like on the end, right? 28% of B2B's facing businesses that solely rely on e-commerce Q2C solutions had 28% more cash on hand than those that don't. 28%. Look, cash is king. Cash is king. 28%. This is staggering here. We can talk all day about how we want more profit, but that's why we call it profit margin. It's on the margins, right? And this is oftentimes where most of our businesses live, in 10%, 20%, 25%, but not 28%. Businesses have more cash on hand. That's tangible. By increasing our cash on hand, what do we have the flexibility to do? Hire new employees, to have new growth opportunities, expand into research and development without sacrificing potential profit. Why? Because we can invest that cash into more business development. So remember the first slide where we talked about fees? I don't want to pay the fees. Fees are, again, to reiterate, fees are an exchange, right? A transaction for convenience. So the trade-off here is gaining in that fee, that 2% fee or 2.5% fee is gaining 28% more in cash flow. If I could, I'd drop the mic right there. So let's take a look one more time at our process. Again, what the second half of our B2B cash to quote process, what we're trying to do, especially for businesses that have repeat customers or customers that operations or recurring services, monthly invoices and payment plans, you want that right side, those orange boxes to spin as fast as possible. And the more you can automate that, the better. And the only way you're going to get there is by utilizing e-commerce solutions, which it adds extreme value into your organization. So if you've ever been thinking about, should I invest in e-commerce, an e-commerce solution? Well, my checks, a 2% on a 10,000 check, that's $200. That's a lot of money. Yeah, but think about how much cash you will have on hand if you can now get paid in 5 to 15 days as opposed to net 60. And then doing that over many, many iterations. That's a lot of cash on hand that you can now do things like, again, research and development, building out your team, making sure that your team is happy, increasing salaries. Cash on hand also for you as the executive gives you peace of mind. You're not sitting there worrying about whether or not that check is going to come in. So I'm going to leave it there. If there are any other questions, let me see, look in our Q&A here. Okay. I actually answered that and answered that. Okay. Again, I want to thank you all for joining us here for this discussion. If you do have the opportunity, please follow us on LinkedIn, Hybrid Media. Be on the lookout for a follow-up email that will be going out. Would love to know your thoughts on this session. I will also send a link to the blog post or white paper, I can't remember which one it is, that we talked about CRM. So that you have that when considering which CRM to invest in. And be on the lookout for our next sales growth discourse. We'll be following up in the next probably week or so on when that's going to be. We thank you for your time. We know that you could be anywhere today at this time and appreciate it. Until next time, talk soon.